welcome to FountainFX on Wednesday the 23rd of July 2014. In this blog we're going to be looking at entries and exits, how to manage your orders and therefore how to plan your trades, plan when you're going to get in and where you're going to get out based on price activity, price action. And so we're looking at the pound US dollar on the daily chart, and we can see, just looking at the trend lines that help mark that out, which is the pound has been in an uptrend, very much an acute uptrend in the last month or two, and prior to that it has very much been rising since way back down in January of this year when it was down at the 162, and it's now down up at just below the 172. So that was the high, and it's now pulled back. Now we have a variety of things in which we can do. We could say potentially we've now got a double top here, price is going to fall, so therefore we're looking at price to continue on down. However, for it to do, it's got to break through certain areas where, if we look here, there was previous resistance, it did break through and it pulled back and it created support at that point to rally higher. So looking at that move here, which was a drop, and then we had a base, and then we had a rally out of it from a supply and demand point of view. So we're now looking at this area. If price is going to continue to rise in this uptrend, so we're going with the trend in that sense, so price is going to continue to go, we are looking at this as being an area where potentially price can turn and then continue in this uptrend. So if we look here, similar thing back here, price rallied all the way up, and then we then had a pullback into this previous area of resistance. If you go across from the left across to the right, did push down a bit further below before it then consolidated and then turned and pushed all the way back up. But if you look here, the first time it did come into it at this point is where we then got a rally from it. So if you think about that, what we're looking for is the point where it comes back into this previous low and then rallies out. Okay, so that's our entry. So we're looking at, if we look across the right, it's the 169.70. We've got a lower point below that in terms of where we're going to place our stop. So that's our entry and our stop planned out based on this area of demand at this point, which is where price rallied from. So in terms of our target, where would our target be? Where would we look to get out? Well, the easiest one is to say we'd look to get out of the top here, which is where price has been. So we now know that price at the high is up here at the 170.68. We might want to target an area just a little bit below there to make sure that we do take the profit and it doesn't turn and fall again. So we might just adjust this and take the high as being somewhere around about here, the 171.40. So that's quite simply our trade mapped out. If we go into a slightly smaller time frame, the 4 hour, then we can see what that looks like. So looking at this, we have our entry down here, this line across the bottom. We're looking at that area for our entry. We may want to adjust it a little bit and bring it up a bit just to make sure that we do get triggered, because if you look, there's quite a lot of sideways movement here. This is the odd one out with this very long wick that pushes down here. We need to have our stop below this, and so therefore we're looking at an entry of, if we look at the 169.80, and then if we go down here, the 169.50 is the bottom of this area, so that's a 30-point risk. We might want to extend that to 40 points to allow for slippage, etc., give us plenty of space. So we've now got a 40-point area of risk, and if we look to take profit up here at the 171.40, so that's going to be from the 169.80 to the 171.40. So what's that? If we look at that, that is 160 points for a 40-point risk, so that's 4 to 1. Okay, so that's a fair trade in terms of what we're looking at. If we also look at this, if we look at the way in which the momentum, price did rally out there quite strongly and pushed up hard. So in terms of our planning, we've got an entry at 169.80, a stop at 169.40, and a take profit or a target at 171.40. How do we then load that onto the system? Quite simply, we go to the top, we click on New Order, we get the window come up, We can click down onto pending order. We can do a buy limit because that's what we're going to do. When price gets down here, we're going to buy, and so we type in the 1.6980, and we can place that, but we can also place our stop loss, which is going to be the 1.6940, and we can place our take profit here, which is the 1.7140. Okay, and then we just click on place. We leave the expiry open because it's good till cancel. In that sense, we don't have to put in a time on there, but we can monitor it. So we'll have it will appear at the bottom of the screen in our order entries, and when it gets executed, we'll see that. So we've now placed that order. We can see that it's here, buy limit there. We're looking at our take profit up there, and if we scroll along to the left, hopefully we will find our stop. There you go, there's our stop down here. Stop loss is down at this level. Okay, so that's really very simply how to plan a trade and how to place for your entries and your exits in terms of how to run that. So Sonia and others who've been asking the question, I hope that helps you, and we will add to it tomorrow. And happy trading from FountainFX.